Typical morning for me, wake up between 6:30 and 7. Usually check the emails to make sure that nothing urgent's coming overnight, or if something urgent has come in, I can see what it is, maybe deal with it right then and there before getting out of bed. Get the kids ready for school, then get ready for work, head into the city, and get ready to start the day proper, start the work day proper. Coffee or tea? Definitely coffee. I know the typical drink in Australia is flat white, and at most cafes, that's what I'll order. But at home, I like to do a nice Arabica French press black coffee. That's how I like to take it. If I wasn't shooting a video today, I would be in the office. I'd be out doing meetings with potential investors or with other industry participants on video calls in Japan. Or I'd be speaking with my co-founder who's based in Tokyo about what's going on the ground over there. It's just so many things that go into the day-to-day of running an investment management business. You've got the investment side, you've got the investor side, you've got the administration side, and the general strategy side. So the days really tends to be divided between wearing all those different hats. How I first got into investing, I was actually really lucky. My dad had bought a book called Rich Dad, Poor Dad by Robert Kiyosaki, which he encouraged me to read at the age of about 18 or something. So I was kind of already thinking about investment opportunities when in my second year of law school, a guy sat down, started up a conversation with me. We got to talking. We realized together that we were thinking about investing in the same way. And he was investing in the share market, the stock market. And all I knew about the stock market was the 1987 crash, which was a massive scar on the psyche of New Zealanders. And so I'd never really thought about investing in it, but he suggested a book to me called One Up on Wall Street by Peter Lynch. And once I read that book, I was just hooked and read everything I could about the stock market, investing. I was doing a law degree, so I taught myself finance and the investment concepts. And then I some years later, managed to get a job in the industry in Australia. My connection to Japan started as far back as intermediate school in New Zealand. So I was about 11 and we started doing Japanese classes. Because back then Japan was probably New Zealand's biggest trading partner. It's China now, after Australia. It'd be China now, but Japan was huge back then. This was just after the bubble would have popped in Japan. Not that we knew that much about that back then. So I started doing Japanese language classes. Continued that through high school. And then when I was at high school, we actually had the opportunity to do a school trip to Japan. The teachers accompanied us. And part of that trip was a 2-week homestay with a Japanese family where we actually got to spend time with them both during the week and on the weekend. And on the weekdays, we attended the local high school. So that was a real eye-opening experience for me and just created a lifelong connection with Japan. How I came across the investment opportunity in Japan was I joined Platinum Asset Management as an analyst in 2011. Now, Platinum was Australia's biggest global fund manager at that time in global equities. And Platinum was typically seen as a value contrarian type shop and invested a lot in Japan. But trying to get the average analyst to work on Japan was quite difficult. So the guy that ran our Japan fund at the time, Jacob Mitchell, who's now founder and chief investment officer of Antipodes Partners, the global fund manager, he was running the fund at the time and he kind of took me under his wing and I spent a lot more time working on Japan than the average analyst. Fast forward some years later and I started seeing some headlines about shareholder activism in Japan, which went against everything that I knew about investing in Japan because I'd always been told management teams in Japan don't care about shareholders. They don't have to listen to shareholders. I'd see companies with half of their market cap in cash just sitting on the balance sheet. And I'd be told by the portfolio managers, well, you're never going to see that cash, so it has no value because management's never going to give it to you. But then I started seeing these headlines about shareholder activists doing things in Japan, and that made me go, hold on, what are they seeing that I'm not? From there, I went down the rabbit hole of the history of the governance landscape in Japan, the legal underpinnings of it, the history of activism, and then the changes that Abenomics had brought in and how they were seeking to reform the corporate system. And something clicked in my mind. I was just like, this is a huge opportunity. What if all of those companies with half their market caps or even more than half their market cap in cash and other securities, as well as decent businesses attached to that, what if all those companies are suddenly forced to start caring more about shareholders? Like, this just opens up an entirely new way of investing in Japan. Well, not entirely new, but entirely new to me and entirely new to most people in the world. And from there, the opportunity just seemed obvious to me. Yeah, I like to do a bunch of different things outside of work. Gym, obviously. Play touch footy on a Sunday morning occasionally with a bunch of interesting guys from around here. But then the things I probably like to do the most is playing music, play guitar, love heavy metal music, and also skiing. Now, guitar lessons, I had some of those when I was younger. So even though I'm not the best guitar player in the world, I don't look terrible skiing, unfortunately. I think I am far better than I am. When I see videos of myself, it's a bit cringy, but I really, really enjoy it. And it's a great sport to do with your kids. My kids are 4 and 6, so you can't really play rugby with them. You can't really play cricket with them. But if you invest a little bit of time and too much money, you can actually get to the point where you can ski down a slope with them and ski with them all day, and they're just yearning to come back, keep going back for it. And just, it's a really great time. So what Senjin Capital does differently from other funds is that we aren't just investing in deep value stocks, and we aren't just balance sheet investing, and we're not just business investing. So a deep value investor might go, okay, this company is very cheap because it's cheap relative to its assets. We do that. Someone who's looking for a great business might say, okay, this company is somewhat expensive, but it has a really good business. What we want is something trading for at deep value prices that has a good business attached. But the key difference to what we're doing to other funds is that we create our own catalyst to realize that value through constructive engagement with the company, educating them on financial concepts, because these are small caps, they're unsophisticated in finance terms. It's really educating them about what return on invested capital is, why it matters, and how you can manage to improve it, identifying opportunities for them, and providing some outside impetus for people inside the company who are probably already thinking this way, but are being held back by deference to the hierarchy above them. So we create our own catalyst, and to me, that's just a much better way to go about it than simply buying a deep value stock and hoping it re-rates. It's knowing that you can do something to help that process happen. Well, the way to explain activist investing, I think, is it's probably to contrast it with what it's not. So a typical investor buys a stock because they like the story, they think earnings are going to grow, they like the management team, they like what management are doing. An activist investor kind of inverts that. An activist investor says, I don't really like what this management team is doing with their company, with their business, with their capital allocation, but I think we can change how they're approaching it, or we can help them change. We can educate them on how to do it better. And I don't want to sound patronizing when I say that. Like, they obviously know how to run their business. They know how to make great products. They know how to serve their customers, but they maybe need some help with understanding what the market needs from them, what shareholders want to see. And so I think the key difference is that an activist investor goes into a situation that maybe doesn't look great, but looks to change it, actively engage and change it. Whereas a typical investor wants a situation that looks good and goes into that situation. So if an activist investor can be successful or has a good process they can follow, their returns should be much more asymmetric than those of a typical investor, because they'll pay lower valuations and they have more certainty about the outcome. They're not just trying to guess what's going to happen. They're actively trying to make that thing happen. The thing that excites me most about the corporate reform in Japan right now is that we really are at an inflection point. It's accelerating. And I think that inflection point really started with METI's release of their takeover guidelines. That's the Ministry of Economy, Trade and Industry. They released guidelines around corporate takeovers back in 2023. And the Tokyo Stock Exchange released kind of guidelines requiring companies to publish a disclosure on how they plan to get their stock prices trading above the level of 1 times price to book. Basically, the finance theory is if you're trading below 1 times price to book, the market thinks you're destroying economic value. So it's a very blunt instrument, but a very simple measurement for companies to deal with. They've got to get their stock price up above 1 times price to book. They do that by improving capital allocation, having better growth strategies, having better investor relations. So those two things together have really brought about this change, and it's heightened pressure from shareholders and given them an anchor point to point to when speaking to companies. Now, the TSE's actually even published examples of bad disclosure where companies have disclosed how they're going to get their share price above 1 times price to book, but they haven't dealt with key issues. And so shareholders can now point to that and say, hey, looks exactly like your disclosure, and the Tokyo Stock Exchange is saying it's a bad disclosure. So that's all very exciting. But what it's led to is just this massive boom in takeovers now. Companies are much more likely to buy themselves out, like the management takes the company private, or there's even some hostile foreign takeovers, or companies are increasingly selling themselves to private equity because they don't want to have to deal with the new pressures of being in the public market. They don't want to have to deal with activist investors. So the influence that the music I listen to, heavy metal, has on my approach to investing, I'm not sure it has a direct influence, but I think it's a reflection of, in some ways, the type of people that are interested in things like investing are probably more likely to listen to music like heavy metal or like classical music, stuff that's a bit more intricate than your standard sort of pop music that you hear on the radio. Heavy metal is definitely a niche, and I get that it's not everyone's cup of tea. But it's similar with activist investing. It's a very rewarding niche for people who get into it and who really go down the rabbit hole. But it's not for everyone. It's not for everyone. It's got to suit your personality. The joy that you can get from listening to a great song, that's like the joy of uncovering, a hidden gem that people have overlooked, and just knowing that you can help improve it and help make it better and help actually make it better for not only for shareholders, but also for the people that work at the company. Like a ritual or habit that helps me stay focused is getting to the gym. If I get to the gym during the day, it breaks up my day. My wife goes to the gym in the morning, so I have the kids in the morning, so I go to the gym at lunchtime. So I do occasionally miss it because you have things on, but I try to get to the gym, and it helps me break up the day. It lets you reset, and then of course you just feel a lot better when you've done a good workout. It allows you to keep going and gives you a mental channeling your exertion into something physical that you don't get sitting at a desk. People that don't know me would probably be surprised to know that I played like age group representative rugby growing up in New Zealand. I was reasonably good when I was 14 and 15 because I was born in January. Statistically, if you're born in January, you're much likely to do better at sport, where the age group cutoff is 31 December, because you have like a few months of growth on everyone else. So because of that January effect, I got to play in teams with guys like Jerome Kaino, Joe Rokothoko, John Afoa, Stephen Donald, who won the 2011 World Cup. And we just had this great team. I started some of the time, not all the time. But it was a lot of fun growing up. But then obviously I stayed the same size and everyone else got bigger. But that's something that probably people wouldn't know, that I spent a lot of my youth going to rugby trainings, playing rugby games. Tokyo or Sydney? I'm going to hedge my bets here. I'm going to say Tokyo in the autumn and for the food, and I'll say Sydney in the summer. And then I'm going to add a third. I'm going to say Niseko in the winter. Niseko just has the best snow. It's absolutely fantastic, and great food as well. You can't go past those Sydney beaches. You can't go past the change of season in Tokyo. And of course, the culinary scene there is just absolutely amazing, and for a fraction of the price of similar quality in Sydney. Ski slope or boardroom? Well, both can be tricky places, but both can be very rewarding. Sometimes the conditions aren't the best skiing. It's icy. There's not that much snow base there supporting you. Maybe it starts raining and you have a high wind blowing, so you start to get very chilly. The boardroom can be a similar environment, but when things are going well, you can get a real high off both. So I could really enjoy being in the boardroom, and I can really enjoy being on the ski slope. Metallica or Slayer? I have to go with Metallica. I've seen both of them live. Slayer's probably a bit more technical, faster, so it's a lot of fun live, but Metallica's definitely got more range and much easier to sing along with. And, I picked up a guitar for the first time really because I heard a Metallica song and wanted to play it, so I can't go past Metallica. I used to be a night owl, but since having kids, I've definitely had to become a morning person. And I think for any parent out there, you know that by the time you've gotten the kids into bed, it's very difficult to get that burst of energy back as a night owl. But sometimes you have to push through, obviously. There's work that needs to be done. You need to be doing calls with Europe or the US at evening time when we're down under here in our time zone in Australia. But definitely more of a morning person these days. Paper notes or iPad? There's something to be said about the act of writing on physical paper. And a lot of studies have shown that if you write notes down rather than type them, or not write anything, that you're much more likely to retain the information. So If I think back in my investing career when I used to use notebooks all the time, like physical paper notebooks, I had a stack of about 10 to 15 completed notebooks on my desk. But some of those meetings that I had with companies 10, 15 years ago, I can still remember what was said in those meetings. I think that's because I wrote the notes down. It's not quite the same when you're typing them out, even though it saves time later when you go back and refer to them, it makes them searchable. So there's positives and negatives to both, but I think for me, paper wins out. One word to describe my investing style. I'm going to be cheeky and say optimal, or maybe adaptable. The situation as it is in Japan right now, where you have all of these companies that have balance sheets just laden with assets, and you can buy them very cheaply relative to those hard assets and get a decent business attached for free. It's not going to persist forever. I think we've got 5 years, maybe 10 years where we can still find opportunities like these. But the changes happen. So we will have to adapt, and we're already planning ahead for that and thinking about the next evolution of how activism should evolve in Japan. So yeah, adaptable. The biggest myth or misconception that I think even relatively sophisticated investors have when it comes to Japan is that it matters that the economy isn't growing or hasn't really grown. People tend to default to this idea, you need economic growth for stocks to work. Well, you don't really. Japan's stock market's up a lot over the last 2 years, and the economy hasn't grown much. If you have a cheap enough starting valuation and you have fundamental improvements in the way that companies manage their business, in the way that they allocate capital, the shares are going to go up regardless of what happens in the general economy. Consumption spending's weak. Oh, okay, that's bad for some consumer companies. Is it bad for a manufacturer of a necessary product that has its market cap in cash and investment securities, that then an activist comes on the register and says, hey, maybe you don't need all that cash and investment securities. So they do big buybacks of their shares or pay out a big dividend. In that case, I think that stock goes up almost regardless of what is happening in the general market, and definitely regardless of what's happening in the economy. If I had 100K to invest right now, I would invest it in Senjin Capital Fund 1. And, that's what I've done, actually. Practically all of my liquid net worth is invested either in Senjin Capital Fund 1 or alongside the fund. I had to invest alongside because an SMSF, self-managed super fund, or my equivalent of a 401k for American listeners, that can't be invested in a related party vehicle. So it's invested alongside the fund, but my co-founder as well is invested heavily in the fund. So we win when our investors win. And that's where I'd like to be. I think the potential returns that we can generate are very strong. And I think the downside risk is mitigated to a large extent by the fact that we are buying these companies so cheaply. They have large cash balances or holdings of real estate or other investment securities relative to their market capitalizations. And they have pretty good, stable core businesses. That's what we're looking for. Stable core businesses, very overcapitalized balance sheet, cheap valuation. So I think that really does mitigate the downside and creates this asymmetric return profile. And that's kind of the holy grail of investing. You want to try and limit the downside and try and maximize the upside. And that's what I think the opportunity is in Japan right now. Balancing risk and reward in your decision making is pretty key, and what we try to do is minimize the risk and maximize the reward. We've purpose-built our strategy from the ground up based on our detailed knowledge of the Japan market and of how activism works and the legal environment and the private equity environment and all of this information that we've absorbed over the last decade. And our understanding of how the practice in that area has evolved over time. We've purpose-built the strategy from ground up to best fit where we are in the market right now. And the key goal with that strategy is minimizing the risk, maximizing the reward. We're buying companies very cheap. We're looking for companies that already have signs of governance improvement, so our activist engagement is much more likely to be successful than if we just picked a company at random. We're buying companies with decently stable businesses, so they shouldn't be too subject to economic fluctuations that really hurt them. And we're buying companies that have the option to grow via M&A if they actually chose to pursue that option. So potentially you could get a big re-rating if and when the market starts to see this no-growth, boring company as suddenly a growth opportunity. So we think we really see ourselves as minimizing the risk while maximizing the reward. And I think that's key. That's key to investing. The future of shareholder activism in Japan is bright. There's a lot of funds pursuing this course of action now, or in the broad sense of shareholder activism, there's a continuum from people that are super friendly all behind the scenes to people that are highly aggressive in public, saying aggressive statements. We're sort of in the middle. We believe in behaving constructively, acting constructively, really trying to help management improve. But at the end of the day, if management's not willing to improve, then maybe they're not the right people to be running the business. I think where we are right now is this real inflection point where stocks have moved up because activism has become much more acceptable and management teams have become much more accountable to their shareholders. Prospect of getting a good outcome has improved. So your actual annualized return profile as an activist investor is still very, very strong if you execute well. From here, we're probably like maybe 25% to a third of the way through Japan's journey. If we put the end point as where the US is now, the US started this journey in like the late 70s, early 80s. The US looked a lot like Japan back then in terms of like conglomerates and, not really focused on shareholder returns. So I think we've got a long way to go. We're maybe a quarter, a third of the way through. There's a lot of room to grow. Now, the nature of activism might change over time. Those obvious balance sheet deals may start to go away, but there's still going to be plenty of opportunity to engage with companies to do a better job, cut underperforming business lines, put in better management information systems so you actually know which products are making money. Switch staff over to merit-based promotion because people typically move in line with seniority and lockstep in Japan. So a ton of reform to come, and the government is harnessing activist investors and private equity investors to try and push those reforms through. Long and prosperous future ahead of us in Japan. The advice I'd give to someone who wants to become a better investor is read a lot. I mean, Warren Buffett talks about this, right? Everyone likes to cite Warren Buffett, but it's because he's got so many good sayings. He talks about reading 500 or 600 pages a day of newspapers, of books, of being a voracious reader. Like as you read, the knowledge compounds. You might forget the specific thing that you read in that one book. The principles remain. And as you read, the more knowledgeable you are, the better you are able to assess an opportunity that's in front of you. And I don't just mean read books or just read newspapers. I mean, read company annual reports. Study the accounts, read what management's saying, look at transcripts. Don't just limit yourself to ChatGPT, go to the source, although ChatGPT can be a useful tool. But that's the advice I'd give. Read a ton and then think back to first principles. Always think to yourself when you're reading something, does this make sense? Why does this make sense? What are the incentives? Essentially, that would be my wisdom, if any, to impart to someone wanting to become a better investor. The most underrated skill in investing, I think, is being able to imagine things not as they are now, but as they could be. And that can take a few different forms. So right now we're in the middle of this AI boom. And it seems like pretty much everyone except the typical contrarian naysayers are saying this is going to be huge. This is going to revolutionize the way that we work. This is going to drive incredible energy demand. And maybe all of that's true. But even if all of that's true, it doesn't necessarily hold that the companies that have developed large language models actually make much money from it. They have huge costs. They have high operating costs because each time you type a query in, it costs in terms of the usage of the GPUs, the usage of the power, the cooling of the data centers. So each query is costing them money. They're not charging currently sufficient to cover that. And as we go on, it's not clear to me that there's any one of those companies has particularly a large advantage over the other. So it looks like this competitive death match. And any profits from those companies may be very far off in the future if they at all eventuate. So you can be a total believer in AI, but can you step back and go, well, what does that actually mean for those companies? Now, it's a long-winded way of saying it's important to think back to first principles, and it's important to think about what could be and not just go along with the crowd. So the kind of impact that I want Senjin Capital to have for investors and in Japan is twofold. For investors, obviously, we want to produce great returns. We want to deliver a product that does what it says on the box. We want to follow our process. We want to provide them with great reporting, with as much transparency as we can without hurting the returns. We want to provide interesting content so investors can follow us on the journey. For Japan, we want to help be drivers of this corporate revitalization that the government has been pushing for since Abenomics, at least since Abenomics, maybe longer, depending on how you want to count it. We think that through our constructive engagement with companies, through our education, through helping them be better, through helping the internal forces of change with some external pressure, help those internal forces become stronger, we think we can help be a small part of revitalizing the corporate landscape in Japan. And what that actually means is productivity growth for society, more effective capital allocation, which also helps productivity growth. So labor productivity growth, more effective capital allocation, helping overall productivity growth. And that ultimately feeds through to higher incomes, a wealthier country, a population that's better off. And also better outcomes for the Japanese retirees who are major shareholders. If I fast forward 10 years, what success looks like to me for Senjin Capital really has to do with what we've delivered for our investors. So I'd love to have delivered investors solid returns between now and 10 years in the future, to have followed our process, products done what it says on the box. And I would have liked to have contributed to the corporate reform in Japan. I think in 10 years' time, it would be great to see if the average return on equity for Japanese companies had gone up and the valuations had gone up and Japanese people were wealthier and employee wages had gone up ahead of inflation, and to have been tiny part, a small part of contributing to that, but being able to see specific companies where we've had a real impact that's contributed to the overall statistic, I think that would look like success to me. For wholesale investors who are interested in Senjin Capital and the way that we're looking at the Japan activism opportunity, you can reach out to me on LinkedIn or X. I'm active on both platforms, post a lot of content. Follow along with content if you like, or my direct messages are open. You can also email us, investors@senjincap.com, investors@senjincap.com. And our website is currently being built and may even be up by the time you've seen this video. So www.senjincap.com.